Welcome to Trading Essentials channel. In this channel we are dedicated to help the traders who are still struggling to become consistently profitable traders. The topic we're going to talk about today is how to use support and resistance to trade on the consolidation market. First of all, we need to distinguish the current market, whether it is a trending market or a consolidation market. If we cannot differentiate both markets, we will be really confused when we are trading because we don't know which strategy we are going to use when we are trading. Now we can clearly see that in the US dollar Canadian dollar chart is in a downtrend. Usually, the consolidation market will occur before and after the trending market. So when the current chart shows a strong trending market, we should pay attention to the fact that there will be a high probability to occur at the end of the trending market. In fact, most of the time the market is volatile, and only a small portion of the time is in trending. But when is the consolidation market and when is the trading market? How exactly can we differentiate both of the markets? Now I will use an example to explain to you how I differentiate both of the markets. First of all, in the 4-hour chart we notice that the support and resistance is in this area. The price has tried to rise many times, but the resistance above is very strong, so it leads to the failure of the rising and creates a lower low. This area of support and resistance are an area which we are highly focused on because the area of this support and resistance have been tested many times. This is an area that I would consider as a key area. At the moment, the price has made a small consolidation after creating a lower low. And of course we are not going to trade in this area, because what we are currently observing is a 4-hour time frame. If the chart you're looking at today is a 5-minute or 15-minute chart, maybe there are some opportunities for you to profit from this consolidation. My way of trading is that I do not go against the trend of a 4-hour chart if I am trading in 1-hour chart. Which means if the chart I am observing today is 4 hours, I will only trade within the 1, 2 or 3-hour chart. If I'm trading in a 15-minute chart, my maximum observation period would be a 1-hour chart. So currently, we are looking at a 4-hour chart. Then I will look for a more accurate entry area on a smaller time frame. We were able to see the price break directly through the support and resistance that we had been focusing on. Once this area is broken, the market gives us some meaningful information. The market is telling me that this period of rising may be the end of the downtrend or that the market is about to enter a state of consolidation. Today our main topic is the consolidation market. Although we can clearly see that this area has a period of rising that we can easily get some profit. But this is not our topic today. At this stage there are still a lot of traders using the trend line incorrectly for their trading, so if you want to continue to learn some valuable knowledge, don't forget to subscribe to our channel and remember to open the notification bell. Back to this chart, the price broke through the area we are focusing on. And we can also clearly see that there is a potential inverse head and shoulder. The current situation is an uptrend for me. In the actual scenario we don't know the subsequent direction of the market, so in this case, we can only think that the market is trying to change from a long-term downtrend to an uptrend. The question now is how exactly we want to discern whether the current situation has entered the situation of consolidation? First of all, we must pay attention to whether the price will continue to create a higher high or lower low. In this chart we can notice that the price had successfully broken out of the previous high, but then the market fell off rapidly. If the momentum of the pullback from an uptrend is too strong, I will state that the uptrend is unhealthy. An unhealthy trend has a good chance to become a consolidation market. The important area we had previously focused on was broken twice in a row, and then the price came to a relatively low level. Now we can pay attention to whether the direction of this market is rising or falling. At this point we will be a little confused because we don't know if the market is in an uptrend or downtrend. When we have this idea, then the market has a relatively high probability to become a consolidation market. Because the consolidation market is always going up and down in a specific area. Here we already have an expectation because of the deeper correction in the uptrend. The momentum of this correction is too big, so it is likely to be an unhealthy trend. Now we may notice that the price comes close to the previous higher high again and form a double top. At the moment we are focusing on a 4-hour chart. Then we can look at the smaller time frame charts to seek a clearer area for entry. Now we come to the 2-hour chart. And the 2-hour chart we can clearly see that the price bounced off the area quickly and the next candle was controlled by the sellers and formed an engulfing candle. At this time, We can know that the market has a high probability to enter the consolidation market in this case because if the market is in the rising area, the area we are focusing on will be broken. But it doesn't. At this point we will be able to enter a trade and I will place my stop loss a little higher than the previous higher high. Then I will take at least 2-to-1 risk-reward ratio. Of course, if you can see that there is a more important support and resistance in this position, we can set our profit target at this level, which is about 2.5 risk-reward ratio. Now we are going to discuss the advantages and disadvantages of the consolidation market and trending market. In the trending market, we can get a better risk and reward ratio. Sometimes we can even get a 10-to-1 risk-reward ratio trade. But there are less chances for us to trade because 70% of the market is in the state of consolidation. If today you are a consolidation trader, you will have more chances to trade, but you will also lose some risk-reward ratio when compared to a trend trader. Markets are relative and imperfect. So when we want to gain a certain benefit, we lose something as a price. Usually, my profit target in the consolidated market doesn't try to take too far and my advice is kept at around 2-to-1 risk-reward ratio. In the case that we are seeing right now, we make profit about 2.5-to-1 risk-reward ratio. You may also notice how professional traders lay out our trading plans, which is the difference between professional and retail traders. We plan our trades and consistently execute our trade. Now we notice that the market is a volatile market. So I will not take profit like I do in trend trading. If my first trade in the consolidation market is profit, I will trade in the same area again. Normally I will try to trade one more time in the same area, but sometimes if the market gives us an opportunity and integrates the current situation, I will also try the third trade in the same area. Then we may notice that in the 4-hour chart the market has returned to our focus area. At this time we have been able to say with a high probability that the market is already running in the consolidation market. Same scenario, we go to the 1-hour chart, we can clearly see that the market in our focus area has appeared as an engulfing candle. So now I'll go straight into the trade. And our stop loss will be placed close to the previous higher high and try to get a 2-to-1 risk-reward ratio. Of course, if you want to get more profits, it is not impossible, but you will lose your winning rate to get more profits. We can see that if we try to get profit at this support and resistance below, we will lose the trade or break even. If I already knew that the market I was trading was in a consolidated market, the profit margin for each trade would probably only be set at a ratio of 2 or 2.5-to-1 risk-reward ratio. Everyone's personality is different. It's just the way I like to trade. If your strategy can have a better profit margin, then you can also make your trading rules according to your trading preferences. Looking back, we can observe the 4-hour chart, and the price once again comes to the area where we are focusing. We went to the smaller time frame. In this situation we used a 3-hour chart. We may also notice the same engulfing candle gives us a signal. So, I will get into this trade again. I will set my stop loss at the previous high the same as last time, and I will also try to get at least 2-to-1 risk reward for this trade. We can also find that the area where we first traded the profit target is also a very important support and resistance area, but the price broke through the area we have been observing, and the subsequent price did not fall to our lowest point after the pullback, but instead consolidated in the range we had previously focused on. This time we may notice that the price has made a double bottom in the area that we are focusing, at which point we can know that the price will most likely rebound in this area. The situation for this time is slightly different from the previous trade, which we can directly see the good opportunity to trade. So I will not trade directly because this is the price of the first time to come to this area. So I will wait for this double bottom to be broken and the market gives a better pullback before placing trade. Now some people will ask how to effectively set our stop loss. I will suggest an ATR indicator for reference. Then we will also make a relevant video to explain how to use these indicators effectively. Strategies don't work every time. And this time we also lose a trade from this strategy. Same double bottom, but it fails to work out. So, remember that every trade that we place needs to set a stop loss to ensure that our funds are not threatened. We can observe that this system brings us a profit of 4-to-1 losses. So, it is a profitable strategy. As you can see, we only use a really simple strategy, but we need to plan when we want to trade and how much we need to earn or lose before we trade. We need to have a really good plan to make sure we are in a situation with advantages. If you want to know more about how to use support and resistance correctly, you can go back to the last video I made to learn the meaning behind support and resistance and how to use this simple strategy correctly to make profit. If you don't know the principle behind support and resistance, then you must review my last video. The link of the video I will put down below the video. In the end of the video, I would like to share some mindset sharing. The meaning of a good trade is not a winning trade. It is the trade that you follow your rules and execute even if it is a losing trade or a winning trade. A lot of times we have fear to keep trading after we have a losing streak, but if you follow your rules and execute, you need to know we are doing the right things because our strategy has proven that we can profit in the long run based on the historical back test. So don't care too much about the success or failure at the moment. We need to set our sight on the distant future. Leave a comment below and let me know if you get some value from mindset sharing. In my next video, I will talk about how to use trend line in our trading. If my video helps you in some way, don't forget to like, subscribe and share. See you in my next video and hope you guys have a winning streak throughout the week.